Welcome back, everyone. We got assigned again on our cash secured put from Marvell, and we need to open some new positions. So let's get to it. All right, so here we are logged into our Ameritrade paper trading account, and as you can see, we own now 100 shares of Marvell stock because our cash secured put that we had sold the previous week was assigned. So what we need to do is go ahead and go into the website and record that. Here we are on the website, myatwm.com. On the dashboard screen, we need to go to the cost basis page, select Marvell, and here we are. We can see the cash secured put that we sold back on the 16th. It expired this past Friday on the 20th, and we were assigned on that because, as you can see, the last price was $39.52, which is below the strike price, so we did get assigned. So on the result, we're going to click assigned. Today's date is the 22nd. The assignment type was stock. We did 100 shares. We were assigned on 100 shares. The assignment price was the same as the strike price. So that's $40.50. So go ahead and click submit. And when I click submit here, it's going to go ahead and create a new stock transaction, which is going to put it up in here. So you can see this is 0 right now because no stock position exists. But as soon as I click this, it will. So I'm going to click submit. It's going to save that. And now you can see the stocks are showing up in here. If you click here, it'll open that so you can see that position. And also, now that the put has been expired and we've already recorded that assignment price, I don't automatically delete these just in case if you made a mistake or something like that. It retains it just in case you have to come back here and do something with it. So you can manually delete it here. And since this has been recorded accurately up there, I'm going to go ahead and delete this to clean that out. And something else that we need to do, because you'll probably see that it shows the 100 shares, but it doesn't have a cost in here. And the reason why it doesn't have a cost is because we did put this position in play on the board. However, we did not record the transaction itself in the history, the transaction history down here. So what we need to do, and you'll see that the transaction doesn't even exist down here. That's because when it creates a new position up here, it doesn't automatically put the proposed record down here. Perhaps I can make it do that in the future. But in order to get that record, you can just click save here and that'll produce that record for you. And again, you can type it in manually or you can use this helper button to move it down there for you. And since it's the demo account, we're not dealing with fees or anything, so we don't need to adjust this number. This toggle means it's a stock, so we're going to go and click save to retain that. As you can see, it moved it down here, so we're good there. And oh yeah, that's sold to close because we got called out of our covered call the last week. Okay. All right. So now you can see we have a cost in here, and the stock gain and loss, because it's down in value to $39.52. So our stock gain loss right now is -98. Again, that's an unrealized loss right now. And overall, we've still collected $407 in premium on this stock. So we're doing pretty good on this stock right now. All right. So now that we have that recorded, we need to go look to see what we want to do on some new positions. And as you know already, if you've been watching the videos, I like to, now that we own the stock, I definitely am going to be running a covered call, and I'm going to be looking at my cost basis here to determine where I set the strike. And we're definitely going to be running a put under it to a dollar cost average, and so we can play both sides, because playing both sides, only one side's going to win each week. It's either going to go up or it's going to go down, and one of them is definitely going to collect 100% of the premium with no risk, and the other side will, either dollar cost average on the put side, or will get called out of the stock on the covered called side. So let's go look at that. All right, so here we are in Ameritrade's paper trading account again, and what we need to do is we need to go analyze a covered call for this stock Marvell. We have 100 shares. So what we want to do is our cost basis is $40.50. It's trading at $39.48 right now. This is Sunday, so the market's closed, but the last trading price was around $39.50. We like to focus on weeklies. So the next Friday out is January 27th. So we'll go ahead and expand that. And again, we're setting at a cost basis of $40.50. So we don't want to set the strike any lower than $40.50, because then we would risk losing capital, and we're in this to make money, not lose it. All right, so $40.50 strike next week out, we can get $52. So this is a nice premiums that we're collecting on this one. All right, so let's look here. We want to go ahead and sell a covered call on that, and the spread is 52 to 56, so that's 4 cents. So we should be able to get 2 more cents up at the mark midway. Generally, that works. Sometimes it doesn't, and you have to go in there and adjust and move it down, but generally that works. Generally can put the midway point and get filled on that. All right, something we definitely want to do, yeah, it's telling me illegal negative 900 shares because we only own 100 shares. So by default, Ameritrade has this set to put 10 in there. I haven't changed it. You can change it. I haven't changed it to put 1 in yet. So we're going to move that down to 1, so we're good to go. So we own 100 shares, so we can definitely do a covered call on this. All right, we're going to right click, confirm and send. You can see our credit's going to be the 53.35 because they're going to take out their fee. All right, so we're going to click send on that. And then we also want to come back around and put a put, another cash secured put on this because, like I said before, I like to play both sides. So I basically get to collect double the premium, and one of them is definitely going to expire worthless because the stock can only go one way, up or down. So we're going to get to keep one of these 100%, either the 50 or the 70. It looks like we can get like 74 for this because the midway here, the spread, 73 to 76, there's a 3 cents spread there. But chances when you're doing the mark in the middle, you're not going to be able to collect like more than 1.5 cents. So it's going to have to be around 74 instead of 75. I mean, you can try 75. Sometimes you'll get lucky, but generally, I don't want to touch this again, so I'm going to set the order at the mark, and it should go through. All right, so we're going to go ahead and sell a put at the money at 39. Again, we got to adjust this down to the 1. So 39 put, we're going to collect, again, I should be able to get 74 at least out of that. So we're going to right click, confirm and send. They're going to take out their fee. All right, so click send. So now both those orders are placed, and we can actually come over to the monitor and let's look here, count activity positions. Yeah, so the working orders. So there you can see the cash secured put and the covered call are waiting in queue. They will try and execute when the market opens tomorrow morning, and we will see how that plays out. So far, the stock is doing pretty well for us. We're just working the wheel, collecting premiums off cash secured puts and covered calls. I want to thank you again for watching. Like and subscribe if you haven't already, and go out today and get your free account at myatmm.com. Thanks, and I'll see you in the next one.